Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bearish scenario where we're looking for a zigzag 535 to the downside, after which we want to see a continuation of the trend. The most common target area for your wave C is between the 1 and the 1.236 trend-based fib extension taken from the start to the end of A to the end of wave B, giving you a target area between 54.6k and 50.5k. Looking at time, this wave B ended after the 0.382 fib time taken from the start to the end of wave A, which is what you like to see because it is very rare for structures to finish before a 382, so this is perfectly fine for your wave B. And then currently your wave C is between the 0.618 and the 1.618 fib time, which is a common target area time-wise for a wave C. And these fib times are taken from the start to the end of A to the end of your wave B, giving you a time target between the 20th of June, which of course is in the past, and the 7th of August to finish this wave C, preferably inside this particular area. Now, when we put a bit more detail on the chart, you can see that this wave A is a leading diagonal, 1, 2, 3, 4, finishing a wave of 5 and therefore wave A simple zigzag to the upside in a wave B, where wave C hit the 1.236 trend-based fib extension taken from the low to the high of A to the low of wave B, which is a common target for a wave C, and then an impulse to the downside 1, 2, 3, 4 and a wave 5. I have decided to put wave B on this high over here on my chart and on the index chart. This high over here is not taken with the high that we made here on the right side, and honestly this structure to the upside counts so much better as just a simple zigzag ABC than trying to force fit something finishing over here. So therefore preferably putting wave B here on the left high, simply counting this as a 1, 2, 3, 4, 5, which works on my chart as well as the index chart. Now looking for this wave 4, the common target for your wave 4 is between the 236 and the 0.5 Fibonacci taken from the start to the end of your wave 3, giving you a target between 61.6k and 65.1k. The invalidation for this scenario is price moving to the upside, touching the low of wave 1 at 66.2k, because in an impulse 1, 2, 3, 4, 5, wave 1 and wave 4 are not allowed to overlap. After a corrective structure in a wave 4, we're then looking for a move to the downside impulsively in a wave 5 to hit that target area for your wave C. The bullish scenario is a sideways double combo WXY, regular flat in wave W, expanding flat in wave X, and then a zigzag to the downside in a wave Y, either finished or one more low, but the common target area is where we are at the moment, the 618 to the 1.236 trend-based fib extension taken from the start to the end of W to the end of X, giving you a target between 63.2k and 54.4k, with the extension target, the 1.618, being very uncommon for a wave Y at 49k. What does impact the probabilities of this scenario is mainly your wave X, because inside wave X we then count an expanding flat A, B, C, and if this is a 5-wave structure, 1, 2, 3, 4, 5, then well, on some charts we then have a truncation in a wave C, wave 5 not moving above wave 3, which of course is rare, but also if we count a wave C in a 1, 2, 3, 4, 5, your wave 3 did not actually extend, right? It hit the 1.236 trend-based fib extension taken from the low to the high of 1 to the low of 2, but preferably you want a wave 3 to move to the 1.618, which is still above here. Also, your wave C is over twice the length in time of A plus B, which significantly reduces the probabilities for a wave C, which of course therefore impacts the probabilities of this particular scenario. The bullish scenario on the 1 hour time frame is a zigzag to the upside in a wave A, B, and then a wave C. As long as price is not going to take 66.2k before taking out this low, the probabilities on the daily time frame are higher for the zigzag to the downside, where all of this is wave 4 price action and then move down for another wave 5. So therefore I left the ABC on the chart instead of a 1, 2, 3, 4 and a wave of 5. The common target for your wave B is between the 618 and the 886 Fibonacci, taken from the low to the high of A, which has been touched. And we also hit the support area that we had over here, right? We had a gap here on the 1 hour chart, nicely tested and moved towards the upside. And guess where we are now? At resistance over here, the blue box, 61.4k to 61.6k. What is important in this scenario is for price to pass this resistance, as that would significantly increase the probabilities to take out the high. And if we're looking for a wave C, then an interesting target for this wave C is the resistance box that we have over here between 64.2k and 65.1k. In this area, we more specifically have a daily at 64.2k, as well as the weekly naked point of control at 65.1k, which is very interesting resistance indeed. So if this is here, the low of your wave B, and we're looking for a wave 1, 2, and continuation to the upside in a wave 3, then preferably we pass this resistance. Now it is weekend, and the weekend is notorious for sideways ranges and not really wave 3s, so that is something to at least keep in mind. If your wave B, however, is finished, then preferably price is not going to move below this low. Preferably your corrective structure to the downside here is finished after touching the 0.382 taken from the low to the high. So as mentioned yesterday, we were looking for price to move into the fibs, right? Minimum target to 382, which has been hit, which is absolutely perfect. Very, very nice. But because of this move to the upside, preferably your corrective structure here and then a wave 2, if we count this impulsively, 1, 2, and eventually a 3, is already finished. And the reason for this is how high this move up went. If we look for example, a flat A, B, and then a wave C to the downside, which is a structure that can appear in a wave 2, well, preferably your wave B in a flat is not touching the 1.618 Fibonacci, which, as you can see, we have done. It is respected, but it is a very uncommon target for a wave B, so it does significantly lower the probabilities that we're looking for an A, B, C here. If price does move towards the downside and takes out the low, we can of course observe potential strength in this area for a move towards the upside and then look for the potential flat, but it doesn't have the highest probability. So from an Elliott wave perspective, preferably you stay above this low. You're gonna grind on Sunday against or around this resistance, create some more local bullish CVD divergences would be nice, as well as prices grinding sideways, and then next week continue the journey towards the upside to take out the high of your wave A. The bearish scenario is a finished triangle and an impulse to the downside. Now before I start talking about what you see here locally with the triangle and the 1, 2, keep an eye on the 0.382. This one is yellow, and I made it yellow because of the daily zigzag count, where we have a wave 1, 2, 3, looking for a 4 and then a 5. When comparing wave 2 and wave 4 in time, most commonly a wave 4 is longer in time than a wave 2. However, a minimum target would generally again be the 0.382. So preferably we are ending a corrective structure after the 0.382 fib time, which in this particular scenario is not the case, as you can see, because here we then have a triangle finished and then count this as a 1, 2, 3 to the downside. Now what lowers the probabilities of this scenario is threefold. First of all, if I open the volume, your wave 1 ended on the highest amount of volume, which is very uncommon for an impulse. In an impulse, we want to count a wave 1, 2, 3, 4, 5. By far most common is wave 3 having the highest amount of volume, then a lower volume wave 4, another drop to the downside in a wave 5 on lower volume, right? It is very unusual for impulses to finish on the highest amount of volume, so it does lower the probabilities that this is an impulsive wave 1, increases the probabilities that this is a corrective structure to the downside. The second thing is that when we look at this triangle and we count a wave A, B, C, D, E, well, first of all, 4 out of the 5 waves in a triangle have to be simple zigzags, and if one is more complex, it is by far most common wave C or wave D that is more complex, not wave B. However, on the lower time frames, it is very difficult to count wave B as a simple A, B, C to the downside because of this range. So that would then increase probabilities for a more complex structure in a wave B. But as mentioned, that there's not high probabilities in a triangle that a wave B is a complex structure, as it is most commonly a wave C or a wave D. Now then lastly, if this is your wave 1 and we look for a corrective structure up in a wave 2, the most common target area for your wave is C, and then a 5-3-5 wave structure is between the 1 and the 1.236 trend-based wave extension taken from the low to the high of A to the low of B, wave B touching the 382 perfectly, by the way. Common target for a wave B, very nice. But as you can see, we haven't yet hit this target area. Now the 618 is a target for a wave C, but it is a rare target for a wave C. By far most common is the 1 to the 1.236 area, which is still a little bit higher. But interestingly, it's of course also above the current resistance area that we have here. And as mentioned, if we can pass this resistance area, the probability significantly increase to look for the highs that we have here as well, which eventually then leads to an invalidation of the impulse to the downside, where we look for then a 1-2 and eventually a wave 3 to the downside. Also makes me think, by the way, during this video that the invalidation of this scenario is actually this high here, because this is then the end of your triangle and you count 1-2 continuation to the downside. But as mentioned, probabilities aren't really on the side for a finished triangle here because of the different reasons explained. We have the 0.382, we have the wave B, high volume in your wave 1 here at the low, and a 3-wave structure to the upside, ABC in this case, which didn't hit the most common target area for your wave C. So in a bearish scenario, what we want to see preferably is simply a continuation of the range, where we either look for bigger triangles, right, A, B, C, D, E, or we are going to be keeping an eye on WXYs, right? So complex sideways structures and then continue to the downside. So in other words, the bearish scenario would mean horizontal price action, and the more bullish scenario is an ABC. And then at the moment, probabilities are still higher on the daily to look for price to move down after. Now also looking at the CVD divergences, we had the bullish CVD divergences here, still active by the way. The target are the highs here. And locally, as price grinded to the downside, it created bullish CVD divergences locally, which was very nice indeed. So what you can see here, we have a higher low in price, but look at blue here, lower low on the CVD, a beautiful bullish CVD divergence before the push towards the upside. And of course, the more local bullish CVD divergence is supporting the bigger one, so it does increase the probabilities to sooner or later take out the highs. And if we then look at the probabilities of the different scenarios, then on the daily time frame, the probabilities are higher for the bears unless price can move up to 66.2k, invalidate the impulse to the downside on a daily time frame, and that is the moment we can switch bullish, which is then also the number 2 spot over here. And on the 1 hour time frame, the probabilities are higher for a zigzag ABC or a continuation of this range. By all means, we are currently at resistance here, but if price can pass this resistance, probability significantly increase to take out the highs. Makes it of course interesting to also look for the resistance up here and see how price reacts if it can move all the way up there, right? And then on the number 2 spot, we have a bearish impulse to the downside, finished corrective structure, looking for a 1, 2, 3, but I have explained why the probabilities are lower for an already finished corrective structure. And if we are bearish, then preferably we're either looking for a bigger triangle or a WXY, but we do need some more information for that scenario. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.